All right, it's Monday, October 26, 2020, and this is your weekly look at the Altos Research data that came in over the weekend for the entire US real estate market. This week, we track, as we do each week, every home for sale in the entire country, all the pricing, all the changes in pricing, the supply and demand. And we make those analytics available to our customers so that you can see the trends in the US housing market far before it becomes available through the traditional data channels. This week, the median home price in the US stays flat from last week at $350,000. The cohort of newly listed properties, the pricing ticked down to $315,900. That's the blue line on this chart here. This has stayed elevated for so long this year that it's sort of tough to read. So it's a tick down this week, but it's tough to read it as, are we starting the seasonal pullback? Maybe. We would expect this number to pull back each week from here on out and finish the year under 300K, with fewer and fewer new listings coming to market each week until January. But so if this stays elevated like it has, that'd be sort of unprecedented in the data and would seem very bullish for 2021. So the price of the newly listed cohort is definitely a leading indicator for us to keep our eye on through the next few months. Total inventory is now at 549,000 as this October transaction window wraps up. We're still 40% below normal or below recent years at this time. So the 2020 theme of record high demand on top of record shortage in supply continues. Expect 1 to 2% reduction in total inventory each week until the second week of January. This is normal seasonal pattern, albeit coming from the record low recent levels. So with 68,000 new listings hitting the market this week, you can see that the hot market is actually pulling some supply out. There are slightly more new listings this week than there have been in recent weeks. And you can see we've been in this normal range for a while. So as I've said before, this seems healthy. Any new supply is going to help the buyers get the homes they want and help sellers capture some of the massive equity we've built over the last decade. Finally, this week, we are looking at the percent of properties on the market that have been relisted. A relist happens when a home is on the market and, for example, maybe it doesn't ever get any offers, it gets really stale, and the listing expires. Sometimes the seller picks a new agent and then relists the house for sale. Sometimes relisting happens because a deal falls through in contract. Maybe a buyer walks out of the contract or contingencies aren't met. And you can see here that in relistings spike in January as properties get pulled off over the holidays if they haven't sold yet, and then they get relisted in January. You can also see in our pandemic induced dip for March and April, like nothing was getting relisted at that time. There was stuff getting pulled. And then a spike climbing back up in May when we all realized that buyers were buying. So these properties got relisted in May. So that's the red line here on this chart. You can see how this is a leading indicator for a market downturn, for example. So if we reach a place where deals start failing or where buyers are cooling off, you'll see this relist number climb. So for example, in 2006 in San Jose, when we'd been in this crazy hot subprime market, demand was way artificially high. But in 2006, the market was actually already turning. those buyers were starting to fail. The deals were coming off. The prices, the sellers weren't getting the prices they were expecting, these elevated prices. And so the relists were happening. They were coming back on, withdrawn, relisted. And in 2006, the relistings percent in San Jose climbed to almost 30%. And that was 2 years before Lehman Brothers blew up, for example. So if you're in the camp who is worried about the state of the American consumer's finances and, for example, bearish on real estate as a result, this relisting percent is a powerful leading indicator to watch. For right now, it's as bullish as all the other data, but we'll keep an eye on this to see if our bull market changes in 2021. So that's the data this week. As always, visit altosresearch.com for the full details and getting the latest data. Subscribe to our YouTube channel to get these videos, other videos each week. If the conditions change and this forecast changes, you'll see them here first. So as always, please post questions, comments in the comments below. If you have a view on the market you'd like us to explore. All right, more next week. As always, thank you.